Hello, welcome back. This is a quick follow-up, and I hope you enjoyed the last video as well as talking about that trader's block. Here's a great little suggestion as well. A market may get out of a trade and we don't know whether or not we should reverse course or not, right? So we had our system, which was long, got out at the profit target, and it trailed the stop. So what happened? It stopped out. We didn't get out at the best price at that particular trade, and that was the determined profit target. This was the entry. Here was the risk on the trade, and it did the right job. It trailed the stop, and then it got out when it should have. It did not reverse and initiate a new short position because there wasn't enough criteria met to go short, which is a good thing because on a day like today, again, this is Friday, August 17th, with the advanced decline as strong as it is, nobody really should be testing the short side of a market when you have strong breadth and strong follow-through momentum on most of the markets. But why do people struggle about maybe not taking buy signals? And so as we get out of the lunch hour, I'm not sure what the technical or fundamental news was, but the system itself generated a buy. It had a reasonable expectation of risk. So if a person suffers from that trader's block, what would keep them out of this incredibly nice trade? Seriously, most people would just really hunker down to be long from around 45 and take a trade out at 52 and then still be long in the trade, right? Here's another great trade. That's two great trades where you avoid potential chop and slop. The position right now currently is still long one. It was long two, got out of one, and it's long. It's going to do the same thing over here. As long as this market continues to move up, it'll trail the stop, and if it reverses and fails, then it'll stop itself out again, just like here. Beautiful system, beautiful setup, and if you have the ability and the confidence in knowing that this is a bullish day, I only want to take longs, that's a great trading plan, right? That's a trading plan all of us should have. I'm bullish, and the reason you're bullish should not be because the wind's blowing from east to west. You should be bullish based on a set of factual data. We use certain factual sets of data points to determine whether or not the day is bullish or bearish. And that's partly due to higher time frame analysis, strength market internals, and those are the skill sets that we want to continue to teach you how to trade right, and more importantly, get your mindset correct and get yourself on the right footing to make the money you deserve in this market. Anyway, I wanted to re-emphasize what's going on here today and what the system's been doing and why we want to be focused on longs on a day like today, especially on a Friday, a summertime market. I'm not saying this thing could continuously blow up. I'm not skilled enough to tell you that this market's going to go one way or another from here. The indicators kind of show that things are slowing down a little bit, but it's Friday volume activity. I can just say that if the market continues higher, I would want this long trade to have taken some profits for me, and I would want it to automatically trail a stop. Or if the market reverses, I would want a function to get me out so I don't lose what I've already earned in the market. And that's where we stand with this wonderful system that we put together that many people have called the Person Algo Optimizer. Thank you for watching. I just thought you would enjoy seeing the follow-up of how the market broke out, but before it broke out, noting that we had another defined setup. And by the way, the setup and the trigger that got us in here was pretty much the same trigger that got us in there. It's just we're taking bullish signals in a bias bullish trading day. Thanks for watching.